Hi investors! Today we talk about IDEX stock and the incredible news that came out on IDEX and also their latest SEC filing that most investors have missed. And guys, please listen carefully because I will give you both the good and the bad side of things. I've made quite a few videos on IDEX, and to all my subscribers who bought in with me, we are up 63% guys, so let's celebrate all together. So let's start with the latest news. IDEX delivery numbers for December 2020. And so in the month of December, they delivered 439 vehicles. But the question is, does it really matter to us investors? Don't worry guys, I will break it down for you. Because the devil is in the detail. And so the deliveries were made by 356 vehicles for the ride-hailing business segment, and the remaining 63 were rental cars. And do not underestimate the importance of these figures because they can predict what sort of numbers we will see in the next IDEX earnings report. But more on that later in the video. And guys, these delivery numbers are actually not great news, and the reason is because the CEO of IDEX, Alf Poor, was predicting great delivery numbers for Q4 compared to Q3, and that was announced in the latest earnings call. But what actually happened is that the numbers are exactly the same as the Q3, and so this ramp up that was expected did not quite pan out. And so in a nutshell, the Q4 deliveries for IDEX are actually okay, not great. But why is that? And the reason for this bad performance for IDEX was actually explained by Moneyball, my favorite Chinese journalist. And he explained that the outbreak, so it means the Rona, caused the ride-hailing demand to shrink, and also much bigger companies took a hit by the Rona, and these are BAIC, Motor Electric Vehicle, and one of this channel's favorite, BYD. And so not only IDEX was affected, but this is not all for IDEX. Stay with me because what comes next is very interesting. Ideanomics CEO Alf Poor has announced they will acquire 100% of Wave, a company that specializes in inductive charging systems, and this will be for both cash and stock consideration. And there are two phases for this deal. One is positive, and the other one, not quite. And guess what? The not so good part was hidden in an SEC filing, which we are gonna go through in just 1 second. But let's start from the positive side first. Wave is a great addition to the portfolio of companies that IDEX owns. And to literally quote the CEO Alf Poor, Wave has become a market leader in inductive charging systems. And actually, Wave complements our Medici Motor Works and Trick businesses. And it's also aligned to our MEG division's sales to financing to charging model. And so guys, I don't know you, but I'm incredibly excited about this acquisition. And also that means another step in the direction of a more vertically integrated EV business. And the most important part is that Wave is based in the US, and so it will mostly work with Medici once they finally launch their vehicles.
One eternity later.
And I will make a video update as soon as they announce these vehicles. I am so excited, and that will send the stock price to the moon. And so what I just described is the positive part of the Wave deal. But there is also a not so positive one which we need to go through. Wave will be bought with both cash and IDEX shares. And that will be in a combination of 15 million cash and 35 million worth of Ideanomics stock. And that's where the bad news is. 35 million worth of shares that the company will give. Obviously, they will print them and give them to Wave. And so that means a 5% dilution at the time of recording. And that's not great news already. But unfortunately, there is more. The 50 million cash that IDEX is gonna use to pay for Wave comes from actually more debt that the company has taken on. And as you may know, more debt means more risk for a company to go bust. And actually, IDEX is no exception. And this is where things get very interesting. As I told you earlier in the video, there are already numbers, delivery numbers, that can give us a clue about what we are gonna see in the next IDEX earnings report. And Simply Wall Street has made an incredibly long article about IDEX debt, and I will summarize it for you. In a nutshell, they think that IDEX EBIT and free cash flow will be enough to pay off their debt. That is great news for us investors because we want to avoid, as investors, company with too much debt, and thank God the cash flow seems to be enough to cover the debt in the long term. And Simply Wall Street added a more nuanced statement. Debt brings some risk, but it can also enhance returns for shareholders. And so the question becomes, is it a good time to buy IDEX or not? To the chart! Right, the first thing that I noticed is the RSI that is oversold, but this stock tends to be in an oversold position, and in the last 2 months, the stock seems to be forming some kind of flag that might break up or down. And so we're above the moving average, and that is positive because the stock seems to be quite receptive, and every time it touches it, it seems to bounce back up and then come back down. And so the stock is in a very tricky position at the moment. I would personally buy when the stock is closer to the moving average because, like I said, that seems to be a very good moment. Ultimately, the future is a mystery, but one thing is certain: the price of EV stocks will pop when good news comes out. And I will make video updates on IDEX and all EV stocks because basically that's what I do. And if you're looking for another explosive stock, how about Solo? The video on the screen right now is a deep dive on Solo stock, also called Electromechanica. Pick an explosive stock and click on this video.